All right, so hello everyone and welcome. My name is Kiki Willis. I am the lead for events and programming in the Global Endeavor Club and an original member of the 1993 club that started with Katie Smith Milway and quite a few others who are both on screen and off screen right now. Welcome everyone. We're really honored that you're actually choosing to spend Endeavor Day with us to talk about an important and salient topic, investing in sustainability, or how to move capital to support the new technologies and businesses that are vital to transforming the global economy to address the climate and sustainability crisis. Today, we have a stellar group of INSEAD alums all participating in the sustainability value chain. We're going to hear from venture capitalists as well as business and tech leaders who are bravely navigating the world of impact investing. So before I introduce the panel, I'd like to thank Nicole Harari for making her marketing and operational support of this webinar available. And a few housekeeping notes. This webinar is scheduled for 1 hour. This is going to give our panelists time to introduce themselves and their companies, and then leave ample time for Q&A. So please put your questions in the chat section of the Zoom or raise your hand during audience Q&A. And also this meeting is being recorded. So now on to the panelists. Kamal Hassan is the founder and managing partner at Loyal VC, an open-ended, globally diverse fund with investments in over 380 companies globally. Kamal has a 20-year career as an entrepreneurial CEO and 15 years as an angel investor. He holds an INSEAD MBA, as does everybody in our panel today, and a degree in engineering physics from Queen's University. And perhaps more importantly, Kamal is a founding member of the original Endeavor Club in 1993, working with Katie Smith Milway and me to bring issues of sustainability into the curriculum, of course, me and many others. Nicolas Sdez hails from Lille, France, and has an MBA from INSEAD as well, and a degree in maritime engineering from ENSTA in Paris and Politecnico in Italy. He is an avid sailor and first worked in the decarbonization of the shipping industry, where he developed a wind propulsion technology. Nicolas is co-founder and CEO of Pronoe, an internationally awarded climate tech that focuses on ocean carbon removal. Harini Sundaran serves as VP of Marketing and Sales Operations at GreenStruxure. She has over 22 years of experience in energy management and tech, leading global transformations, driving business growth. She has an MBA from INSEAD as well and holds a master's degree in chemical engineering from IIT in Madras and an executive MBA in sustainability from a place called MIT Sloan. Never heard of it. Harini is also the president of the INSEAD Community Impact Challenge Global Club and a close partner of Endeavor. Agreeing to moderate our panel today is Jinna Lee. She is a co-founder and partner of Endgame Capital, and we'll get to hear more about Endgame Capital today as well. Her founder journey includes 4 startups in reusable packaging, fintech, and hospitality industries. She started her career in management consulting, and in addition to the MBA from INSEAD, she has an HBA from the Ivy Business School at Western University in Canada. And with those introductions done, now I'll hand it over to Jinna Lee, who will moderate the panel and take us through the rest of the presentations. Jinna?
Great. Thank you so much, Kiku, and thank you for organizing this panel. I know a lot of work has gone into it. And yeah, I'd just like to echo Kiku, welcome everybody. And this is Global INSEAD Day, so we're very glad to be speaking about a very important topic, I mean, for everybody in the Endeavor Club and hopefully to all of you as well. So I'll ask Kiku maybe to throw up the slides, and then we just have, for each of the speakers, we prepared a few slides just to share a little bit about the work that we're doing to give some color, and then we'll dive into investing in sustainability panel topics. But yeah, a little bit about me while Kiku is getting that loaded is I'm I just had a baby, so he's 6 weeks old. And for that, we relocated to Brussels. I've been living in Amsterdam for the last 4 years, but now in Brussels, where my husband's family is from. He's also an INSEAD 19J, and we did meet in INSEAD, so it was a proper INSEAD baby. Yeah, and we actually worked together at Endgame Capital after starting angel investing for a number of deals. We decided to professionalize our investing activities and to focus purely in climate technologies. So since last year, September, we've made 5 deals, and we have deal 6, 7, 8 coming up soon. It is angel syndicate. So what that means is, I mean, different from a fund, is we look for deals, and when we find them, then we ask our investors if they want to participate in the deal or not. And of course, at a much lower capital requirement than participating in a traditional venture capital fund. We invest across all climate sectors. So yes, Kiku.
Well, housekeeping note. Can you see your slides?
No.
Yeah. Oh, the slides are up. The slides are up.
Slides are up? Okay. Great.
Yeah, everyone can see them. And if people want to go on speaker view, and you'll be able to see just the person talking when they're talking. Otherwise, it's hard to.
Okay, now I see the slides. All right.
Great.
Yeah, so I just wanted to kind of set the baseline. I'm sure most of you in this webinar are aware of this, that climate tech innovation is required to get from 50 billion tons, so 50 gigatons of CO2 to zero in the next, more or less 30 years. So that's what's shown on the graph in the left. If we want to get to the 1.5 degree pathway, that's what we need to do to get to net zero. And the green part in the right, so you can see that there is an enormous funding gap that exists, and such as pertinent to our topic today about investing in sustainability. So there needs to be all sorts of financing that comes in for this climate funding gap to be filled, not just venture capital, but we'll dive into that topic a little bit later about the different types of financing. And where we play, next slide, please. So in terms of Endgame Capitals, I mentioned that we're an angel syndicate. So we invest in climate tech innovations, and we unlock access for smaller investors to participate. So again, why? Because there's a lot of investments that's needed to get to net zero. And like a venture capital fund, we source and diligence early stage deals, and we have a 100 million ton greenhouse gas reduction kind of potential requirement for the deals that we invest in. And how we invest is we pool together investor capital and unlocking access to these climate tech deals, and we co-invest with some of the best sector expert VCs. So yeah, as an investor, of course, you can choose the investments that you want to participate in or not. We have a lower ticket minimum, and especially I want to encourage female investors. So we made that minimum even lower. And we have networks with over 150 plus climate tech VCs. So that's where most of our exclusive kind of deal flow comes from. And as a traditional VC, we perform extensive diligence on both impact and the financial potential. So, I mean, this is all very conceptual. So the next slide, I'll show you some of the portfolio companies that we have invested in, including Helios Energy, which is an INSEAD founder. He's a CEO of this company. And what they do is they have a software algorithm that's shifting energy use for commercial buildings from peak. So peak energy means using fossil fuels. So from peak to off-peak energy, which means using renewable energy. And we also invested in Bashworks, which is addressing industry, circular economy, industry, supply chains for manufacturing. Cubic is upcycling low-grade plastic waste into building materials. That's 5 times less CO2 than conventional materials. As you probably know, steel and concrete are very carbon intensive. Smart Meter, they are a smart metering hardware SaaS platform that is enabling, again, renewable energy sources, especially in emerging markets such as Africa and Southeast Asia. And also Bloom Labs, which recently just won a massive award and was featured in Vogue Fashion because they transform protein waste, so chicken feathers, into new textile materials that is actually competitive in terms of quality and price, and is able to be produced at the scale that we need to transform our quite wasteful fashion industry. So with that, I'll pass it to the next company. I'm not sure in the slides. Yes.
Actually, we're going to go over to Kamal, who is going to speak. And he does not have slides, unusually. So I'm going to stop sharing my screen, and we can just invite Kamal to share about Loyal VC. Kamal, you can also unmute yourself.
That will help. So yeah, Loyal VC is a fund. We fund INSEAD alumni, and we're really a facilitator for the INSEAD community to support each other. We have over 100 INSEAD alumni who have invested money into a fund that has invested in over 200 INSEAD alumni entrepreneurs. Any INSEAD alumni entrepreneur on the call, or if you know any, please do send them to us. And we have over 600 INSEAD alumni who have volunteered their time to support other startups, give them advice, connections, and so on. So we have over 1,000 members of the INSEAD community who are now supporters of Loyal in one way or the other. Actually, the other thing we do is we actually work with the INSEAD Student Impact Fund, which is a current activity of students interested in investing in sustainability, and we actually support them, give them chances to do deal screening, to work with sustainable companies. Now, you may be wondering, I mean, we fund INSEAD alumni. Where does the sustainability angle come in? Actually, over 90% of our portfolio companies address one or more of the UN Sustainable Development Goals. We're actually starting to quantify as well the social and environmental return on investment we get from that, and that may come up in the conversation here. One of the things we find, we are a generalist fund, and one of the things we find is very powerful in this space is when you are funding first-of-a-kind innovations, often people do things which are really unusual, which aren't targeted by most funds. And there's often, if you're really innovating, there's often gaps show up. And you'll hear from one of our portfolio companies, Nicolas Sdez of Pronoe, who are doing some unusual things in the water space. And there are relatively few funds who are willing to look at innovation in the water space. And there's always these gaps which show up. We have multiple companies doing different climate innovations. We do staged funding where we do small investments, get to know the company, spend months really understanding their story deeply. And some of these things sound crazy when you first hear about them, but as you can go behind, see the science, diligence them, it allows us to then make much smarter follow-on investments. That's probably a pretty good introduction there. You'll understand more about us through hearing from one of the companies, and would like to invite anyone in the INSEAD community, if you want to take part to support if you are a startup or you want to support startups, we're happy to be a mechanism to allow you to do that. Thanks very much.
Thank you, Kamal. Jinna, I'm going to hand it over to, let me start sharing my screen again. Just a second. And
Yes,
that's Nicolas.
I can take it over. Thank you, Kamal. Thank you, everyone. So Nicolas Sdez, very briefly, as had been introduced before. So I'm an engineer by first degree, an MBA by second, and I'd been working on climate and ocean for a while before INSEAD. So I'm in INSEAD to 23J, so not that long ago I was in Fontainebleau. Before INSEAD, I was working on the decarbonization of the shipping industry for 7 years, scaling innovative technologies there from scratch, projects, and having the chance to co-found the first venture in the process. And essentially, we'll talk about that, but climate situation is alarming. We are late in taking serious climate action, and essentially doing less bad is not enough. We need to do more good, and that's essentially what we're trying to do. So working towards ecosystem restoration and carbon removal. And so, yeah, for about a year and a half, I started the journey while at INSEAD. I'd met a PhD in process design and chemical engineer, that's called Juan. And we started this essentially a water tech company around ocean CDR or ocean carbon dioxide removal. So maybe just a couple of words about what's carbon dioxide removal and what's important. So what we need to reach is zero CO2 emission. I would argue net zero, actually. And so that involves negative emissions by definition of this net zero, because there will be remaining emissions, and likely when we reach net zero, we will have exceeded our carbon budget, first needing to be net negative every year, starting in hopefully in 2051. So that's what we are doing. And essentially, if you can go to the next slide, please, Kiko. So essentially, and very just to have a picture of what we are doing in practice, we work with natural carbon sink and natural carbon cycles. And what we do is we develop and deploy compact automated water treatment systems that are plugged in downstream of coastal industrial sites and essentially make the flow. So these sites have a flow to the sea that's in general very acidic. We make it less acidic, and that brings positive environmental impacts and also measurable impacts in terms of CO2 capture and storage capacity of surrounding waters. And the idea is to deploy these containerized systems on a number of sites globally, including the Global South, where there may not have the infrastructure yet to handle gaseous CO2 for storage. And yes, maybe to jump to link to the topic, I think investing in sustainability is definitely a thing. If you move to the next slide, Kiko, please. So we were lucky to have early on international recognition, which brought also various kind of funding. We will discuss that, but the sources of funding are more and more diversified between equity, quasi-equity, and non-dilutive. That involves also a number of new stakeholders and challenges, but that's another thing. But just that to say that we were blessed with being selected as a top 100 solution in the context of X Prize. It's a Elon Musk sponsored prize. And attending a conference here in San Francisco about investing in sustainability, essentially in the field of carbon removal, with more than 400 people attending. So essentially, traditional investors are trying, and this is organized by Santander, which is one of the largest corporate investment bank. So even in the investing world, people are trying to understand how to cope with both opportunity and challenges. And so very briefly on the last slide, Kiko, please. So yeah, this is a very quick chart just to show the variability of funding. You have catalytic, you have grants, you have VC money, of course, but also more and more strategic investors. And this comes with, so that's an opportunity with new financing mechanisms, also challenges for investors, for measuring impact, for us, or for startup companies to understand what are the incentives of these actors. And there are some unresolved problems, and we're going to discuss it just after, about how to fund certain stages of technology and commercial development, essentially something that's called first-of-a-kind financing.
Okay. Jinna, I think Harini is next. And just let me know if I need this.
Can people define terms like FOAK, NOAK, that kind of thing as they're going through?
For GreenStruxure, just to build a bit about me. So of course, I'm with GreenStruxure, which is a joint venture of Schneider Electric. So it's a corporate venture arm, which is working on the energy transition mainly for the commercial industrial markets. that is happening. So I have been with, before GreenStruxure, of course, with Schneider for a long, long time, since I graduated from my INSEAD MBA from Fontainebleau. And that time I was living in France, and now I'm based in the US. So GreenStruxure's focus is more on serving the commercial and industrial buildings market, and more the mid-sized buildings. So here we don't focus on the residential, we don't focus on the large utilities, but the niche is more the mid-sized buildings market, which are far more energy intensive. And we talked, Nicolas was mentioning, Kamal was mentioning, the key is how do we accelerate, how do we serve this mid-market in bringing them or onboarding them into this whole net zero journey. So we know that we have to reduce the carbon, the GHG emissions that is happening. And the key is to engage with each and every stakeholder, each and every companies which are emitting GHG. So our focus is more the mid-sized buildings market. Now, the interesting thing is when we start thinking about these corporates or the C&I market, always it's a mix of planet and profit. Okay, I need to focus on clean energy. At the same time, I don't want to be spending more money for getting the clean energy so that it's not impacting my bottom line. So that's the thing that we always look at, that is the clean energy needs is there for the market. At the same time, what are the different investment vehicles, the financial vehicles that is available to this market so that they can make these decisions and move forward with it. So today, when we look at this market, what are the typical financial vehicles? So of course, the companies can invest their own money. So it's more of a capex investment. They can put the energy assets, say it's a microgrid, on their site. So they put their own money. That's one option. Or they can get the clean energy going through a PPA route, which is a power purchase agreement. That is getting a contract with a clean energy developer and getting a clean energy delivered for a specific $1 per kilowatt hour rate. Third could be more of a virtual PPAs, virtual power purchase agreements, which is more just getting the renewable certificates for that, which is the attributes, not necessarily the clean energy, one option. Fourth one could be going and buying some renewable energy certificates, which is just the clean energy attributes, which should be the last option. It's more of getting, paying some money, getting the attributes. And there's a lot of challenges with double counting that happens. And the last one, and the one that is maybe emerging quite a bit, is the energy as a service, which is what GreenStruxure is focusing on, which is what I'll touch upon it a bit. So here, what GreenStruxure typically does is it comes with energy services agreement, which is energy as a service option that is given to this, to these C&I, the commercial industrial corporates, where there is no capital upfront that is needed for the energy assets, underlying energy assets. Say it's a microgrid.
Just let me know when I should advance slides. Okay.
Yeah, probably the previous slide itself. Yeah.
Previous slide? Good.
Yeah. So maybe to touch upon this one, which is the energy services agreement. So here there is no capital upfront from the companies, and there is always a price certainty that is associated with the clean energy rates. And there is no financial or operational risks because we take care of the whole thing. So here the customer generally sign a long-term contract, and we do the designing of the underlying microgrid assets, the financing of it, the building of the assets, then later on the operations and maintenance of the whole thing. And the customers typically pay a monthly fee associated with it. And the whole thing, whatever is promised as part of the initial contract is, of course, can be seen during the operations phase using our platform, which we call, of course, it's an AI platform, which is generally a digital twin platform, because the same platform is used for designing the assets. And the same platform is going to be used in the operating the assets to be sure that whatever is promised is being delivered. And it brings complete transparency. And of course, there's a lot of, typically over a long, like a 20-year contract, that's millions of dollars that can be saved. And the good thing is this helps in the companies to make a good decision, given that they help to switch to clean energy. At the same time, it benefits their, it's a positive impact on their bottom line. So if you go to the next slide, Kiku. So thanks. So this is just maybe I wanted to just highlight on with one case study just to make it a bit more practical. So this was for one of the food and beverage companies which went into this energy services agreement approach. So it was a bakery site, manufacturing site, so they make cookies and so on in California. So there were 6 sites and they had 2 goals. The company had 2 goals. One, of course, getting clean energy to hit their decarbonization targets for 2025, which was 100% of the sites running on renewable energy. That was one. And the second one was how can they reduce the impact to the ever increasing prices from the utilities? So how can they keep that a bit more manageable? So that was the two big things. And of course, with our solution, they were able to achieve both. So it's a long-term contract. The energy prices are lower than the utility. So that's one thing. They get clean energy. They get all the, of course, renewable energy certificates, the clean energy attributes associated with it. But one of the good things that came out, and that's one of the reasons to highlight this case study also, is most of these bakery manufacturing sites were located in low-income communities. So bringing the clean energy into the site with the microgrids and going on, of course, serving not only the bakery, also benefited the whole community and attracting more clean energy into that area. That's one. But also, of course, bringing more energy equity to the whole population. So it was a good one. It benefited the planet, the community, and of course, the company in terms of the profits. And of course, we'll talk a bit more as we go into some of the discussions.
Great. Thank you very much, Harini. What a great example. That's really a win-win-win situation for all the parties involved. Jumping in then into the panel. So I like to, open this question for everybody kind of as a quick warm-up, a couple words each, just identifying kind of what are the most promising trends or innovations you see in the sustainability space today. You can start with Harini.
I think in the space, there are maybe, for me, when I look at it, there are a couple of things. One is the technological changes that is happening. It's quite a bit of we talk about technology, but the technology is moving so fast and it's becoming more economically viable too. So I think technology is there, and of course it continues to improve. The second big thing is the financial vehicles. There are a lot of innovative ways that is coming in, and I talked about a few of those, which is more getting tuned, which is more getting addressing the challenges of the target audience, whoever that might be. It could be residential, it could be commercial, it could be industrial, it could be utility scale. These investment arms or these financial vehicles are getting far more tuned. And the key is that is to ramp up the market adoption of those.
Great. And to Kamal, any promising trends that you've seen lately?
Certainly, I think in the past couple of years, people are thinking much more about negative carbon. And I mean, just 3 examples. You heard Pronoe there talking about taking carbon out of the atmosphere using the oceans. We've got another company in our portfolio which takes carbon directly out of the air itself to be used in industrial processes. And there's another INSEAD startup I know which is taking carbon out of the air and funneling it deep underground. So we've got all sorts of interesting things happening there. And I think that's, we need to think not just about reducing emissions, but we need to think about how we can take the carbon, which is already in the air, out of the air.
Excellent point. And Nicolas, any innovations you've seen, in the sustainability space today?
Yeah, I mean, the rate of technology improvement and innovation is outstanding. And yeah, I would definitely echo Kamal and Harini there. There's also a lot of innovation with financing instruments when you're on the startup side. Something that excites me a lot is the transparency, because more and more you're seeing these playbooks and shared knowledge, and that raise the level of understanding of various financiers across the investing of sustainability value chain.
Yeah, I couldn't agree more. I feel like everybody considers the climate crisis a challenge that everybody can support and get behind. So there's definitely a lot more sharing and collaboration. All right, well, we heard our three panelists today talking about the capital stack or different financing options when it comes to sustainability. So let's dig into this topic first, since it is, after all, investing in sustainability. So sustainable ventures often operate in uncharted territories, and as we've alluded to, there's a lot of deep technologies that have long R&D times. We've heard first of a kind facilities that require huge capital investments. For example, a gigafactory costs over $1 billion just to put up. So this is a very hot topic at the moment. And we know that, as Nicolas pointed out, VC dollars are helpful at the start, but soon become dilutive and very expensive if you're using them to finance physical infrastructure. So yeah, I'll start with both Kamal. You're an investor in Nicolas' company. So I invite both of you to speak about the capital stack that's available to sustainability ventures and how it needs to evolve to support innovation.
Sure, I guess I can start. One of the things which we see a lot of, and we sort of accidentally fell into this. We're just a generalist investor who invests in all sorts of technologies, and we end up funding a bunch of sustainable technologies. But what we see in a number of our portfolio companies is there seems to be lots of government money out there when you're at the science stage. And when you want to do something in a lab, people will probably, there's a number of sources to get that funding. And then there are all sorts of, as Nicolas's chart showed, there's lots of commercial sources who will be delighted to fund number 3, 4, 5, 6, 7 of a version. And we have companies who are lined up, we've bought portfolio companies where people are literally lining up to say, I want to do your third installation, but I don't want to do your first. We do an unusual staged funding where we start with small checks, get to know the company in depth, and then every month we pick the top couple of the companies in our portfolio and we offer them a larger step of financing and again from there. And what we've seen is that larger step of financing can be very useful when people are building their demonstration plant. And then again, from there, if we do a larger step next, that can really help people roll out that first commercial version. And yeah, you don't want too much equity when you're rolling out the first commercial version, but you also often need a mixed capital stack where you've got a bunch of debt, but you also need to have equity there as well to enable to support, to give the debt holders comfort. So that's really ideally the advantage of what we can do by this staged funding process. Now, we can't guarantee that'll happen with all companies because we only fund the top couple each month, but that is really the gap we've seen our process funding. Nicolas, you've got experience with a lot of funders. What have you seen?
Yeah, thanks. No, I would definitely echo what you're saying. I think there's more and more diversity in terms of financing sources for equity, quasi-equity or debt. It's a spectrum, it's a continuum, and so that's an opportunity because you get a variety of actors. That also means more stakeholders to deal with and navigate, to understand what are their respective incentive timelines. And yeah, so for instance, the fact that Loyoli is an open-ended fund is super important for technology that may take some time to deploy. But then again, I think in general, investing in sustainability is a very good investment, and that also echoes the fact that there is ample grant money in the field, right? So actually, the capital efficiency of sustainability and hardware startups is remarkably higher than traditional B2B SaaS company. Then this doesn't come without any strings attached. So typically grants are tied in one specific geographies. So even if many grants are targeted towards a company, at the end of the day, governments or local governments are interested in projects. So if you're a French company doing a project in South America, you may not be eligible, for instance. But again, there's and also what Jinna is saying is people are willing to contribute, and we have a lot of founder-friendly money, including a new mechanism, what's called recoverable grants, for instance. So grants you pay back only if you succeed. You have 0% loans, profit participation loans. So a number of new innovative financing mechanisms.
Perfect. Thank you for that, Nicola. And you mentioned that, I mean, Loyal VC is an open-ended fund. So Kamal, for your investors, how have you managed their expectations or built your fund to support this need for kind of patient capital where sustainable ventures might take longer to generate the returns?
Yeah, well, look, I was an entrepreneur for 20 years, and you always hate it when a venture fund is shutting down and they're forcing you to sell, even though you don't want to sell. And I was also an angel investor for 15 years, and I know what it's like to have your money stuck in an investment. And my top investment took 14 years to pay me back. So we just said, why is this set up? So it's an open-ended fund. So the entrepreneur has the patient capital, but at the same time, every quarter we set a price of the units of our fund, and we allow investors to trade in and out. Now, there's limits on how much can be traded out, depending on how much money is coming into the fund, so that the entrepreneur is not affected. But it's, yeah, for us, it's just, it's a totally sensible way to fund. The entrepreneurs prefer it, and individual investors prefer it. And really, the only people who don't like that fund structure are traditional pension plans, et cetera, who are used to investing in a 10-year fixed fund because they're used to a cycle of deploying money over multiple years and then getting it back. But I think that's what we're trying to do, is democratize venture capital and offer a way of investing which is much more attractive to people. So it isn't just the big pension plans who can invest this way, but also people can. And of course, entrepreneurs love it. Entrepreneurs love an investor who's with them however long it'll take their business to succeed.
Yeah, makes total sense. Thank you for that. In our introductions, we've heard several times speaking about balancing profit and purpose. So although at our investment fund, Endgame, sometimes I hear, the view that investing in sustainability prioritizes environmental and social impacts over financial gains. Now, we don't, it's not our philosophy. We believe that they go hand in hand. So if the company is successful, then they're making impact. So yeah, I'd like to turn to Harini. So when it comes to profit and purpose, you are delivering win-win projects. How have you navigated this in your company?
Yeah. So if I think about, I mean, it's a great question, because if we can talk about saving the planet, moving towards net zero, everything is a great one. But if this does not resonate with the profit element, it's not going to be the case. So for us, when we talk to any of our target market segments, which is the C&I market, the key is the solution should always bring an economic benefit. So both should go hand in hand. We go with the clean energy, which is far more viable, far more economically, it makes total sense for them to switch, because it meets all their clean energy goals, etc. But it has to be helping them in their, the energy that we deliver should always be lower than what they are paying today, so that it is profitable thing for the company. This has always been the case. So anytime that we do, we always, to ensure that profit and planet happens, it's part of our value proposition that we take to the customers. How we do it, in this case, there are a lot of things that can be done in two elements again. One is the technology, trying to make it far more efficient, far more optimized, so that the initial capex that goes with that, it's far more optimized and efficient. That's one element. The second one is the price that is being offered should always be taking into account all types of incentives, all types of tax benefits, all types of cheap capital that is available, that can be packaged together and brought to that corporate. These are two things. If done efficiently, I would tell planet and profit, they go hand in hand, and it's happening today. It's not something far in the future. It's happening today, and the key is accelerating the whole thing.
Perfect, and that's so encouraging to hear. It's already taking place today. And then shifting to Kamal, as an investor, I'm sure you've seen some startups that are proposing products or services that rely on green premiums or consumer goodwill. In terms of balancing profit and purpose, how do you kind of juggle this or consider this in your investments?
One of the things we see and we think of, as Harini has mentioned, is if you are, being an entrepreneur is all about gathering resources. And you're trying to gather resources, financial resources to run your business, people resources, you're trying to hire staff, etc. And you also need a lot of personal resilience because entrepreneurship is really hard and you will run into many obstacles. And what we see is if you're doing something meaningful for yourself, meaningful for other people, it is much easier to gather those resources. And it's much easier to keep going when things get tough. And we've had multiple startups that we've invested in fail. And often one of the key factors driving failure is when people give up. And people give up when they're not really motivated by what they're doing. When you're trying to make money, you're a lot less resilient than when you're trying to actually change the world, make the planet a better place to live. So we actually think in many ways there's almost a climate premium built in, just because when you are doing a company that makes that much difference in the world, you are more likely to succeed, more likely to get the resources you need to succeed. So we haven't seen that needed at all. We aren't making any investments which rely on specific tax breaks from governments. All of our investments are they're good standalone investments. And often one of the reasons they're good standalone investments is because they're doing something meaningful.
Yeah, couldn't agree more. And speaking about meaningful and not just being profitable, so investing in sustainability means we have to redefine success metrics. Traditionally in VC or in investing is all about ROI as the primary, or return on investment, as the primary measure of success. So investing in sustainability also means that we need to think a lot about ESG elements. So for example, we think about carbon emissions mitigation reduction. But I know for energy sector, there's also about enabling how many megawatts of clean energy or resource efficiency when it comes to manufacturing or circular economy. And social resilience, definitely, for when it comes to betterment of human lives and communities. So yeah, Kamal, what key factors do you look for when evaluating sustainability-focused investments? And can you, so I'll go there and then I'll ask Harini to speak about this from kind of the similarities or differences from the corporate side.
Yeah, one of the challenges we have is that we make investments which do all sorts of difference in the world. There can be things on reducing carbon, there can be things on education, health, etc. So we've been doing a lot of work actually on measuring the environmental and social return on investment. So take everything you do and turn it back into a dollar value. I mean, you can look at a Philip Morris and you can rank Philip Morris. If you do look at these ratings of Philip Morris from all the different ESG agencies, they're all over the place because Philip Morris has really good gender balance in its employees, its management. And yet on the other hand, you're killing people with your product. And we say, well, why don't you just sit there and actually do a return on investment? How much is the added lung cancer costing the health systems in the different countries, and actually put a dollar value on it? And you can sit there and say, okay, well, Philip Morris is creating so much financial returns, and they've got good social returns in the gender balance in the employees, but let's calculate the health costs that they're imposing, and then you can come up with an overall number. And that's something we're doing with all of our investments now. I mean, we've got a basic premise that we won't invest in anything which is net negative either environmentally or socially, but we also want to take every one of our businesses, whether they're considered a classic good business or not, and just have this down as here's the environmental and social benefit and impact of these companies as actual dollars, and you can compare it to the financial dollars you're doing. And we'd like to think this is something which the whole world will be doing in 20 years. The question is how quickly people will be doing it. But for us, we feel it's what we want to know with the way our money's being used. Anyone who invests in us wants to know the impact of their money, so let's tell them.
Yeah, thank you. And I mean, having a common baseline is definitely a much easier for a comparison in how your portfolio companies are doing. And I think that's quite brilliant that you've already applied this to your portfolio. So back to Harini. Yeah, can you share some similarities or differences from your experience and how you have redefined success metrics?
No. Just to build on what Kamal was telling, today when we look at it, most of the companies on the other side, I mean, we have these ESG matrices that is coming in, whether it's environmental or social or governance. Till today, or maybe not in all countries, it has been mandated for the companies to start reporting on their extra financial, not just on their financial matrices, but also the other matrices, which is more environmental, social, and governance related. If there is any type of greenwashing that happens, it hits the brand. So now the question comes up is, okay, what are the things that is happening, at least in the markets that we serve today? So here, of course, the clean energy is one element which not only helps the planet and profit side of things, but the social element, I just want to build on what the example that I was speaking about, the communities that get benefited based on what we are doing today, based on the clean energy that gets served. Today, when we look at it, most of these the energy intensive type of buildings are located in the low income population because of they get tax benefits, etc. That's why typically it has been there. Now, bringing clean energy into those buildings improves the life of the communities in general in two ways. One, of course, the manufacturing site itself is running on clean energy. That's one thing. And the second, it attracts, I mean, it creates a buzz. It attracts more clean energy projects to come into that site, either on the residential side or any other buildings that might be there. So this creates a momentum. So one first step into the community automatically attracts the other players to come in, and that benefits the whole community. So that we have more energy equity that is there, and we don't have pockets of areas which are more industrial zones, which is running on dirty energy. So that truly benefits. And of course, as I was telling, the key is to accelerate the whole thing.
Perfect. And I know that it's still early days for Nicolas in Pronoe, but this is definitely, I mean, the core of your business is about, making impact. Can you share how you have thought about this in your startup and how much focus it's taking place, because it's always difficult to kind of juggle impact and your operations and your sales. Just how integrated is this? How do you approach this, share this? So we have those aspiring entrepreneurs in the audience can maybe take a few advice from you.
Yes, definitely. Thank you for the question. So, a couple of thoughts. On one end, impact is embedded in our business model because what we do sell, what has business and market value, is the net carbon negativity of our operations. So we need to be very mindful of that. So we've run extensive and third-party validated what's called techno-economic analysis and life cycle assessments. This is on the carbon side of things, and I would say this is that's an accounting exercise. There are rules that are more or less strict. You have standard values available online. And now larger social and environmental impact is difficult to quantify. So one needs to take proxies or compounded metrics. So we've been working with Loyal, of course, on building this assessment. What we found valuable also, we are working with Google. We are part of Google Startup for Sustainable Development, and there what they do is they map your impact against standardized metrics coming from the Sustainable Development Goals. And I think it's ongoing work. One framework I find super interesting, but I haven't found any investor yet or company applying it. Is called the Earth System Index. So essentially mapping the company's impact against the depending 9 or 14 planetary boundaries, which is from a climate and environmental standpoint, probably the best set of metrics we have today.
Yeah, and I really encourage those in the audience to look at the planetary boundary framework. Is very robust. It's a very holistic way to think about, yeah, all areas about our planet. So yeah, just looking at the time, and I know that there are some questions already from the audience that Kiku has flagged to me. So we can move over to the Q&A portion, and I'll invite Kiku to yeah, share those questions from the audience.
You've covered actually quite a few of the questions that have come into me, but I wanted to highlight a question that builds on the point of valuing social investment and valuing the social benefits that come or co-benefits that come, and specifically with disadvantaged populations. How have you, or how do you think about specifically advantaging, and how do you value those disadvantaged populations, or I think what we often call sort of climate justice, in your investments? Does anybody want to take that up?
I mean, I can touch one point quickly, which is you often have most impact where people are most in need. So you can find that a relatively small, that education is a great example. You can find that if you educate an already educated person, it does improve their life, but not necessarily to the degree if you're educating someone with less education. So it's certainly, I think there's a little bit of a built-in value to helping people who are disadvantaged, because there is more impact can be done from what you do.
Great. Now, unfortunately, of course, we always run out of time because there's always way too much to talk about. So I think we're going to have to start our conclusion. Are there any other burning questions before we move to that? Okay, great. Then I just want to thank everybody for joining us, and especially for our speakers today. Thank you, Jinna, Nicolas, Kamal, and Harini. Unfortunately, Katie has to jump, so thank you, Katie Smith-Milway, for starting Endeavor and inspiring us all. She has to jump to a meeting at the Gates Foundation where she works now. And so I'd just like to conclude by letting everybody know who isn't already signed up for our Endeavor newsletter. Let's see if I can start sharing my screen again. And thank you for putting up with my my kludgy technology skills. But I'm going to start sharing my screen again. We have we have your ability to sign up with you can sign up on LinkedIn, of course. Look for us on LinkedIn, Endeavor, the Endeavor Global Club. Or you can scan this and join our newsletter. And for the last thing, I'd just like to invite Harini, if you would like to jump in. The Global Impact, the Community Impact Challenge has a special challenge for you, and we'd like everybody to join it. So I'm just going to share that. And it's called Climate Hero.
Yeah, to build on what Kiku just mentioned. So this was a challenge that we launched early June. So this is mainly for each of us to just take, just scan what you have, what you see on the QR code. It is a bunch of questions that it's a very simple, simple set of questions that helps you to calculate your own carbon footprint. It's pretty insightful. It's a quick one, it's an easy one, but it shows the areas that we are typically more spending more our carbon footprint on. So it's a simple one, just take it. And we thought, okay, having this launched for 6 months, so we started in June, we might run it for another 6 weeks. And it has been quite insightful for some people, maybe not so insightful for the others, but it's a fun one. So just take it.
And what's our goal, Harini, for getting participation amongst the INSEAD community?
Amongst INSEAD, ideally, we would like to get up to 10,000 people taking this one. And we are, it has been a very good acceleration in the past 3 months. And the key is to continue the whole thing. So if any of you on this call have not taken, just go ahead and take it.
All right. Okay, with that, I'm just going to leave that on my screen so that people can access the QR code. But I would like to thank again everybody for joining us, and especially our speakers. It's been so exciting to spend this time with you. I know we could talk about this topic for a long time. It's of great interest and it's great importance as well. But thank you very much, and look forward to more programming from the Endeavor Global Club. And we'll see you again next time. Thanks, everyone.